All right, guys, what's going on? Fish here, or trout? Yeah, we're gonna go over kind of how I called today's nuke was gonna happen. So as you guys know, yesterday was the NVIDIA earnings, right? That was kind of the big catalyst for yesterday. That's what everyone was hoping the market would stay propped up on. So yeah, I'm just kind of gonna go over what I saw and how I knew this was gonna fail if NVIDIA didn't cross 200. So I guess before we go into the Greeks, let's just kind of spot over here. So last night on Twitter here, I had posted basically a range last night that I was looking for if NVIDIA didn't break 200. So this is the 15-minute chart of the SPY, which is the Spider's Cash or the S&P 500 ETF. Yeah, so I knew that this kind of line here was acting as resistance, right? You'd kind of get above it, fail, drop below it, but there was also a big strike zone kind of where that was. So obviously today, we tried to rally above it and get over it, but ultimately we went back down as I kind of posted last night, and it was a sharp drop. And I'm going to explain how this happened, right? If we go over to NVIDIA here, so that's your, like right here would be your 200 strike. So if you're watching kind of the aftermarket hours last night, that was kind of the move, right? It kind of just went in this box, it stayed below 200, and ultimately it failed, right? So if we look at where we sold off, it was pretty much right in the early morning hours, right? Like it was right in the pre-market. The market opened right here at 6:30. I'm West Coast, so 6:30, and look, it just sold off right away, right? So what this means is anyone who had a 200 strike for Friday, which is 2 days from now, was underwater. The market maker basically had to push you guys to this 200 range up here. You guys basically had to get that market maker move to get you here Thursday, right? Because on Thursday, you'd have a big green GEX cluster here right at 200, basically. That would say, hey, you get above this, that's going to be your support, and you're going to see some upside. The problem is this acted as resistance, right? So what this means is basically the market maker buys back any calls underwater here that are sold as shorts. Right, so if you come into the morning, the IV crush of your options contracts, basically, you're hoping it goes up, but in reality, it's crossing down, right? The value of your contracts are going down while you're expecting it to come up. So you basically get this this inverted axis, if that makes sense, of what you want your futures or not your future contracts, sorry, of what you want your options contracts to do. So you're expecting upside, but you didn't get this momentum. So you go through what's called IV crush, or implied volatility. And yeah, so Thursday, obviously being today, you can get above that. So anyone that was underwater here, so they would try and minimize their losses, would just get stopped out or sell at a loss. And that creates a negative GEX divergence, right? So that's kind of what we knew. And then if we hop over here to the SPY, today, like I said earlier, we basically opened and tried to get above at this level, right? 675. And if we look at our GEX here, that's right here, right? 676. That's your resistance. This little box, I guess, right here would be your resistance. And sure enough, you get under 668. That's a lot of negative downside. So these green ones here will try and act as support. But when you start getting below the red, that means the move is basically faster down, right? So we've tried to kind of bottom at this 658 range here. But honestly, it's still underwater, right? Like 658 here. Yeah, 655. Like it's not looking too good. I mean, they're trying to basically bounce off this because this here would be dealer market making long. So they would basically make this act as a long, but again, below that, and the move's accelerated. So at the end of the day here, we only got an hour left. If you actually get below this here, you're going to see a rate drop down to the 652 range. So these options Greeks, I notice some people, they don't understand it. It's a little bit weird. It's hard to understand. But when you learn how the Greeks work for your contracts and how it works in an overall market making structure, it makes things a lot easier to understand. So I'll show you another thing too. If we go over to like vol signals here, he posted this VIX thing here. This is basically showing that if you're above 24 in the VIX, it's just going to keep rising. Right? That's not a good thing for people who want the market to rise. This VIX here, if it keeps elevating, it's expecting a market drop. It's expecting, volatility. That volatility metric, if you really learn to understand this, it makes your trading just significantly easier. And, all day today, the VIX has been elevated, right? It's stayed above 24. So going into next week, I honestly expect that this VIX is going to stay elevated, especially OPEX tomorrow. The year-end strikes at 7,000. See if this will update here for tomorrow. Does that work? I don't know if that does it well. But those year-end strikes for 7,000 are bleeding, right? So if you're trying to get to 7,000 in the SPX or the SPY, 700 in the SPY, 10,000 SPX, it's around that. I know there's a little dollar variation or whatever, but anyone who put November 7,000 strikes tomorrow at OPEX, the farther we are away from there, those contracts are underwater. The market maker has to buy those calls back that were bleeding. Pardon me, that were bleeding due to that Vega crush, or I guess that Vega volatility. You basically have to buy back the inversion of that. So anyone who bought a $7,000 strike for November, options expiry, which is tomorrow, Friday, they buy that back as short, right, to kind of cover. So the bulls right now are honestly in a tough spot, because if we go into December and all of these 7,000 strikes for the end of the year expire, well, then January is also kind of going to get volatile, right? And the market doesn't bottom until the last person sells, right? Like, you need to build out a really firm GEX profile, to make sure that you guys are going to be all right, where you're in a very tough spot, because we've pulled back quite a bit now, and honestly, the strength, the breadth, and everything, like if we look at like a daily breadth, for example, our RSI tool, this here only diverges when the market's going to drop. It doesn't just like a normal RSI kind of go down and drop. This literally only breaks when the market's weak. This is our CSOE tool here. It only flashes when we're near bottoms. It kind of goes in sync with breadth. But breadth here, you can see it's still elevated slightly from the bottom, but nothing's happening. So this breadth here usually marks kind of bottoms, right? Like if you look at it, it kind of marks you when you're going to get upside. And it's still up. Like it hasn't flashed yet to show that there's a structural bottom in place. And I'll be honest, there is no structural bottom in place. Doesn't matter if you look at it from a TPO, a Greeks perspective. There is nothing, right? Like this is all just beat up chop and consolidation. And they're trying to hold the floor here, kind of between this box. But if you want my honest opinion, I think this breaks down, and I really think you're going to go visit this 600 strike at some point. And the reason I say that is we'll go and look at the yearly GEX profile here from Vol Signals, because this guy is awesome. He's a former market maker. He posts some great stuff. So if we're here at, this 6... let's see here in the SPX, just so I really give you guys an accurate analysis here. We're right here at 650 zone, right? So you're basically here. That is your market making that's your dealer long, right? The further you get away from this under here, like if you get under 6,400, you're done. You're done. You're going right down. Like you're going right down. And it's going to bring you into this 6,000 kind of area here. Yeah, 5,900. So you're in this tough area now, right? Where your upside here, your 6,700 range, right? That was your kind of resistance. So what was the exact number? 6,770. That'd be basically right here, roughly, like right here. So that was your resistance. None of these support levels have really held, besides maybe some of this here in that 6,500 range. But again, if you break below this, it's bad. So this is the CTA positioning for the NASDAQ. And CTAs is basically, centralized trading advisors, centralized trading algorithms, whatever you want to call it. There's a couple different terms for it. But this basically is just commodity trading advisors. So these are people, like a financial advisor who buys, ETF buyers, whatnot. But what this is it's selling spot. So let's say up here is where they peaked, right? They're selling spot positions, not options. And options are basically, it's leverage, right? Like you're basically taking out debt leverage, trying to, borrow and it's kind of complicated because in my head I understand it, but when I go to explain it, it's like it's kind of clustered. But basically, options, you're borrowing money to make money, right? when you're like in a retirement fund, all you do is buy the SP 500. You know, you buy the ETFs. That's spot buying. When you're buying futures and options and using margin, you know, leverage, short, call, whatever, that's different. So they're unloading spot while they're trying to, you know, retail traders are trying to push up with options, right? So you have this de-risking here, which included tell when they de-risk it drags down price hard, because as it should, you know, spot would drag down price harder than a leverage trade would. So you get this kind of weird structural happening here. And this started happening in October, and a lot of people, including myself, spotted this, is that, yeah, the price is rising, but it's going to start compressing. And as sure enough, obviously they're selling off, and this is causing a compression, and you're getting more of this volatility where everyone was expecting November to be an upside month, right? But that's just not kind of how that works from a, you know, an overall structure perspective. So I would expect today in the SPY here, you know, probably to cap out maybe around this 659 level. It's really hard to say. You know, if you get above it, maybe you see a little bit more, but I expect you kind of to just stop out at the end of the day around that level. We'll see where it goes. But I mean, I knew this was going to happen, right? The minute you see NVIDIA, you know, we'll go back to it again here, but like you didn't see that 200 strike here, and it sold off, and obviously that's going to drag things down, right? So tomorrow they have one last attempt to get above it. I'll be honest, it's down nearly 20 bucks. I don't think it's happening. But going into OPEX, that means all this is going to change again, right? Like this is all going to change going into December. So you're in a weird spot. You know, I've been talking the last few videos how it's been a bearish divergence. But structurally, things don't look good. And I'll be honest, I think the bleed worsens. You know, if we go off the fractal I have here on our SPX chart, I don't see any bottoming coming until sometime in December if you're going to get that. Right? And this pattern's been following perfect this whole cycle. You know, it's up, it's down, it's up, it's down. And obviously the top marked the top. You know, even from just a VWAP perspective, you can get above your all-time high VWAP. You're starting to break below the bottoming from April VWAP. If you get down here, I mean, she's looking frothy. Yeah, and then going into December as well, we have our JP Morgan call and sell walls. So you have your put wall down here at 53.10. You have your 69.50 call up here. Whatever. Oh, sorry, your 62.90 here. So whatever one this gets closest to on December 19th, they're going to hedge into that. So what? Are they going to bleed it down and try and get here into the end of December? Are they going to try and push back up and get to 7,000? I'll be honest, I don't think we see 7,000 by the end of the year. You know, the Fed's not going to cut rates. We know this. If we go over to the Fed chart here today, the unemployment rate came out at 5.30, and it actually ticked up. And if we look at the 15-minute chart, where's 5.30? Sorry, I'm going to do on the SPY here. Yeah, market basically tried to push up from that, and then it sold right off pretty much just after the data came out. And the unemployment rate actually rose up to 4.4%. And we knew this. We knew there was layoffs. We knew there was federal layoffs. We've heard about Verizon and all the AI spending and all the corporate layoffs, right? And I'll be honest, I expect this to get worse. You know, unemployment claims relatively, you know, where we'd expect unemployment change. Or sorry, non-farm employment change. Pardon me, Jesus, I had to slow down. You know, that took a shift. Hourly earnings are down. Yeah, like, oh, here's more unemployment claims too from October, November, early November. Yeah, but they had lost, like the BLS even said they had lost some data, so. You know, we might not see some of that data in December. I'll be honest. I think the safest play right now is that in December, around OPEX in December, you probably get closer down to this. I'm going to be honest. I really do. I don't think you guys are getting 7,000 by the end of the year. I think Wall Street's going to try and get their bonuses, meaning they're probably just going to pile in shorts and make free short cash. And I think that's what's happened now. They're blowing out these people who have been selling calls. They're blowing out these people who have been... or sorry, not selling calls. They've been blowing out the call buyers. They've been blowing out the put sellers, right? They've just been trapping it. If you watch any order flow, you see all the put selling that goes on in the individual stocks and indexes. you can just see that, all the times this has happened up here, where you kind of had that VIX divergence, Wall Street's kind of just come in and said, all right, let's spot sell. CTAs, all right, we're spot selling. And you get these double head shorts kind of coming in, pushing price down, right? So you kind of have this two-sided axe of, you're trying to have the bulls fight one way with leverage, but you're having spot selling and bigger boys putting in selling pressure to the downside. So I think this 620.90 or this 6290 put here, I really do think you get some hedging going into that, especially into OPEX of December, right? Because OPEX in December, I believe, is December 9th. That's quarterly expirations. You have a bewitching here on the 31st, and then you also have your monthlies stopping on the 19th. So yeah, I mean, I could see that, guys. Like, I really could see that. I don't think it's bottomed. Bitcoin did catch a bid here, and I did post about it. There was some call buying, or sorry, some bid-ask liquidity down here around the 85, 86 level. And sure enough, came down here earlier, actually, and swept that. And even from a TPO perspective, I posted this last night as well, but let's just open it. So these are your single prints back here I talked about in a couple other videos, right? And sure enough, you've come down to actually fill some of these. If you want me to be honest, I expect closer to 83, 84. And the reason why is that's kind of your point of control from your largest previous range profile where we were at that bottom. If you catch a bid out here, like this is the April profile from the bottom, that's your point of control around 83, 84. I expect more of a price decline to go down in there. And I'll be honest, just structurally looking at it, again, rejected yearly open, rejected the previous weekly's value area high. I expect it to come down here and fill this. Another confluence to add to that is if we go over to the Bitfinex longs and shorts, the TWAP rate stopped. So it's actually been stopped since this morning. It's been pretty much sideways. Like, they're not really bidding that much in the last 24 hours. And you can see the interest long and short actually nuked pretty hard. So it means they're not TWAPing right now. Could that pick up again? Maybe. But when this Bitfinex TWAP goes sideways, like we've explained before, could that be a bottoming point? So I want to see if this goes sideways. If this just starts going sideways, then yeah, I'll call a bottom. But, I mean, right now we kind of just have to wait and see. A bottom doesn't get put in overnight. There's a lot of bearish threats out there. Going into next week, I want everyone to just remember that we do have some data coming out. We have PPI, unemployment claims again, PCE, prelim GDP. I believe this might be negative or closer to zero. But it depends. But I think right now, honestly, your best chance is if you're going to trade, do it with small sizes and be really precautious about your entries. I'll be honest, there's nothing long I want to look for. Maybe the odd scalp or whatever. But, even Ethereum, it's below its VWAP. Even, I mean, let's see, 365 VWAP here. Yeah, it's below its 365 VWAP. ETH I don't think is structurally strong right now. Same thing with Solana. Solana is under. It's pretty much, it's getting under those April lows. It's getting close to it. It's broken a lot of levels. So I don't know, guys. It's weird. There's a lot of breaking of structure. There's a lot of bearish divergence, and I think right now is. Everyone just needs to be cautious. I think you guys should wait to see what happens in OPEX, and I think you should wait to see the first 2 weeks of December of what the move's going to be. And if you get a structural low and you start to see some bullish divergence, go ahead and long. I personally will be looking for longs into the middle of January. But after the middle of January, when the tariff ruling comes in, I'm probably going to go risk off because I think you need a lot more data going into January. I think the next quarterly... quarter one earnings. Well, I guess it'd be for quarter four, pardon me. But in quarter one, I think that's going to be a little bit frothy. And I want to see, more trade deal development stuff, and I want to see how the China relationship pans out. So, hard to say, guys. I don't know. Everything's weird right now, but you just got to trade safe and trade smart, and be precautious. The next catalyst I look for Bitcoin is those CBOE continuous futures launches on the 17th. Okay, so sorry, the educational courses are on the 17th. The actual launch is December 15th. So yeah, hard to say. But I don't know. That's kind of the catalyst I'm looking for. And the reason why is if you go back to Bitcoin here, January 11th, 2024. So January 11th, 2024 was right here. That marked a top, and that was the launch of the first spot ETF. And exactly 1 year later, that marked the top before we got our post-halving year drop. And that was also when Trump was inaugurated into office. So things like that can be a catalyst. I want to see what those continuous Ether and BTC options do. Will that mark a bottom? Will that mark a top? Don't know. But I want to see that play out first. I really do. Anyways, guys, that's my analysis for today. I hope this helped you guys, and take care.